Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of June the 7th, 2010. Now we have a very volatile end of the week here. We've experienced a basic collapse again in the equity markets, the commodity markets under pressure also. The US dollar index moving aggressively higher. We can see that we've closed the week at 88.31. Point of interest here is that we're approaching multiple year highs here with the US dollar index. Two dates that come to mind are 11/21 2008, where the US dollar index hit 88.55 and then subsequently moved to the again over the 89 level in March the 4th of 2009. Now we could be approaching that level, but again we're at peak levels for the US dollar index. So the ongoing strength of the US dollar is certainly going to be left to be seen, but I'm very cautious when we get into multiple year highs here. Price pattern is very important to take that into consideration. Now with that said, our predicted true strength indicator from Vantage Point right here has already crossed over to the downside, come back up, but it's bounced off the trigger to the downside again. The predicted MACD is trying to cross the trigger to the upside, but it can't. We are still above the zero line on the predicted true strength indicator, so we have a very mixed signal here to begin the week. We have the euro breaking below 120. That's big news, but we've been below 120 on the euro before. This is not the first time in the last several years that we've been at these levels, so it shouldn't be that much of a surprise. Now again, the world banks hold huge reserves in the euros. The euro is not going anywhere. That's a fact. So you know, we've heard this doom and gloom thing on the US dollar a year ago. They said the US dollar was going to the US dollar unit would not exist several years from now, you know, and the US dollar is now at its strongest levels ever. So you know, the thing that it's somewhat comical about that is that the Vantage Point software, by using that, you know, when the market was aggressively selling US dollars back in early November, I was actually putting out buy signals on the US dollar based on the Vantage Point software. So going forward, looking at this week ahead, the predicted true strength indicator from Vantage Point is pointing down on the US dollar index. I think we're going to see one more push here, and then we're going to get a significant corrective move or a complete reversal on the US dollar index. 86.19 is our key level, followed by 86.98 and 87.53 on the 3-day predicted moving average from Vantage Point, with the close at 88.31. So I'm looking for one more push on the US dollar, and then we're likely to see it start to move lower. Now depending on what happens with Europe and all the other global equities, but I'll get into that in a moment. Again, I think the strength in the US dollar is becoming is going to be very limited in the coming weeks and months ahead, especially now that we're going to be very soon we'll be entering into summer trading, so which is again a very volatile time of the year. So let's move into the commodities now and the equities. All of these things are playing a part, so we have to look at again everything. Going in, looking at the light sweet crude, you know, we got that pullback towards that 71.60. Then on Friday we had a great move all the way up over to the 75 level, only for it to turn around and completely collapse back down to the 70.73 on the Europe news, Hungary, Eurozone, all this stuff having a dramatic effect on the equities and commodities. So looking at the week, again, we've got the predicted true strength indicator from Vantage Point has crossed the trigger in the buy signal. This is what I talked about last week. This is not crossing over to the downside, and we are still in heavily oversold territory. We have plenty of room to extend higher on these light sweet crude contracts, in my opinion. So we're probably going to see some volatility on the start. In my opinion, we use a dip lower to get into those buy positions. So with that said, to start the week, again, the key levels to watch: 73.52, 72.66, and 72.64, with a close of 71.51. Now going in, we're going to have a quick look at the daily report on crude, because we certainly want to see what we're looking at for price action to begin the week, even though we're expecting extreme volatility. Now we have 73.21, 70.25. My opinion is we use the 70.25 or slightly below that area to get into smaller, limiting our contracts and start getting into buy positions again. But we can expect a potential for a move here all the way down to probably 69 or even the 68 area before we get our corrective bounce. Or in the alternative, the way the market overreacted to the non-farm payroll number on Friday, we could see it reverse right away. We could see a little bit of US dollar strength coming out of the gate on Sunday night, and then by mid to late day on Monday we could see a complete reversal in the US dollar, the commodities, and the equities. However, I'm not sure that's going to take place, but we'll see. So again, 70.25 is a key area to watch in early trade on Sunday and early Monday morning, and we'll see how that progresses. But again, we still have this loose buy signal from Vantage Point that the crude contracts are probably going to push higher. We can see that the 18-day predicted moving average from Vantage Point, which is a critical level of resistance, was penetrated 5 times last week. We did, however, close the week below that, but in my opinion, that was inevitable only based on the non-farm payroll number. So once the market digests that number a little bit more, and the effect of that number wears off a bit, I think the US dollar will soften and the light sweet crude will continue to move higher. Now, going into the equity markets, absolutely got hammered on Friday, not surprisingly, with again the payroll number causing all of this. So with these payroll numbers, guys, this is fundamental market noise. We hear it, the market reacts to it. A couple of days they overreact to it, then a couple of days later we go back into our the overall trend. Now we can see that the market has tried to penetrate the 18-day predicted moving average from Vantage Point on several occasions last week. Couldn't quite get over it, but point of interest down here again on this predicted true strength indicator. We have a buy signal on this. It's crossed the trigger in heavily oversold territory. This indicates to me that we're going to get a little bit of a push lower, and then we're going to start moving higher. Now we've based out here. Hopefully everybody can see this okay. These candlesticks there's a considerable number of them sitting in this area between 158 and 165. We've closed the